All right, let's talk about day trading. Have you ever looked into it and just gotten totally lost in all the crazy charts, the confusing lingo, and a million people telling you to do a million different things? Well, today we're going to cut through all that noise. We're going to build a simple, solid framework for how to think about day trading before you ever risk a single penny.
So what's the big deal with day trading anyway? Why all the hype? Well, it really boils down to the speed of it all. With regular investing, you might risk $100 to hopefully make $30 over an entire year. With day trading, that exact same $100 risk could potentially bring in over $300 in like an hour. It's all about compressing time. But, and you knew there was a but, right? It comes with a massive, massive catch.
And that catch has basically nothing to do with those fancy charts or some secret trading strategy. Nope. It has everything to do with what's going on right between your ears. Your psychology, your mindset is the absolute foundation of your entire trading career. If you get this part wrong, nothing else you do will matter. So that's exactly where we're going to start, with the single most critical piece of the puzzle, mastering your own mind. And listen, this isn't about some fluffy positive thinking stuff. This is about fundamentally rewiring how your brain processes the very ideas of success and failure.
Just think about it. In pretty much every other area of your life, at school, in sports, at your job, losing is bad. Being wrong is something you try to avoid, right? But in trading, those exact instincts, that deep down need to be right all the time, will burn through your account faster than anything else.
So you have to make three huge mental shifts. First, you've got to see losing not as a failure, but as a totally normal cost of doing business. It's the price of admission. Second, being wrong doesn't mean you are a failure. It's just an expected part of the process. And third, and this one's a real mind bender, making money on a trade doesn't automatically make it a good trade. What? Yeah. If you broke all your rules and just got lucky, you've actually just taught yourself a bad habit that's going to cost you later. The process is always more important than any single outcome.
Okay, so if trading isn't about trying to be right all the time, then what in the world is it about? This is where we shift gears from the psychology to the cold, hard math that makes this whole thing possible. It's a game of probability, not prediction.
And this question right here, this is the key that unlocks everything. It sounds completely impossible, doesn't it? How can you be wrong most of the time and still walk away with more money? Well, the answer is all about how you manage your risk.
The secret is this simple but super powerful idea, the risk unit. We'll just call it R. All R is a fixed amount of money that you decide you're willing to lose on any single trade before you even get in. So let's say your R is $100. From now on, a loss isn't a hard pounding, oh no, I lost $100. It's just -1R. It takes all the emotion out of the number and turns it into a simple variable you can manage.
Now let's see how this actually works with some numbers. Imagine you make 10 trades. You lose 7 of them. That's a 70% loss rate. So your total loss is -7R. But on those 3 trades that you did win, your average profit was 3.6 times your risk. So those 3 wins gave you a total of almost 11R.
So what's the bottom line? Well, you subtract your 7R in losses from your 10.8R in wins, and you're left with a profit of plus 3.8R. And if your R was that $100, that's a $380 profit, even though you were wrong 70% of the time. This proves it. Being profitable isn't about being right. It's about making sure your wins are way, way bigger than your losses.
So we've got the mindset, and we understand the math. But that's still not enough, right? You can't just go in there clicking buttons randomly and hoping the math works out. You need a system, a repeatable game plan that gives you an actual edge.
And building that system is actually a pretty logical 4-step process. First, you just observe. You watch the market and find some kind of pattern or tendency that seems to happen over and over again. Second, you create super strict black and white rules around it. No ifs or maybes. Third, you backtest. You go back in time on the charts and test your rules on old data to see if they would have actually worked. And finally, you test it further by paper trading, using a simulated account to practice without risking any real money.
Okay, we have covered a lot of ground here. We've gone from the way your brain is wired all the way to the nitty-gritty of building a strategy. So let's just boil it all down into one simple, clear framework. This is your path forward.
It really just comes down to these 3 pillars. Number 1, master your mindset. You have to accept losses and just focus on your process. Number 2, understand the math. You have to know that profits come from making your wins bigger than your losses. And number 3, follow a system.
You need to build, test, and then actually execute a defined strategy with discipline. Mindset, math, and method. That's the foundation.
And all of that brings us to the final, and really the most important question. The information is all right here. The framework is laid out for you. But just knowing something isn't enough. The real question isn't whether you understand this, it's whether you have the discipline to actually do it, day in and day out, when your own money and your emotions are on the line. That's the real challenge.
Please subscribe and like.